according to the second annual edition of research by TABB Group and SunGard, 53% of boutique asset management firms identified institutionalisation, I can't even say the word, including the increasing expenses related to regulatory compliance as the make or break factor for them over the next 12 months. The large community of boutique asset managers in South Africa is also facing these regulatory compliance and margin pressures. And we've got Chris nodding away in studio. To discuss this further, we're joined by Ed Lopez, Executive Vice President in SunGard's asset management business in London. So Ed, I think you need to give us the lowdown. It sounds as though there is a lot of pressure on these boutique asset managers. As you mentioned, both margin compression and regulatory pressure.
Yeah, definitely. From the survey that we conducted, which was over 200 firms globally, with some representation also from the Middle East and Africa, what we found was, as you mentioned, over half of the respondents felt that the biggest concern moving forward and the biggest threat to their business was this idea of institutionalization. And just to really clarify what we mean by institutionalization, it is really the growing list of minimum requirements that all asset management firms, whether they be a tier one large asset manager or a boutique asset manager, need to meet in order to do business, and specifically around compliance and regulatory issues. Now, a large tier one asset manager or tier two asset manager, for example, has the benefit of economies of scale. So they've got large compliance teams, hundreds of people in compliance, hundreds of legal experts internally. Smaller boutiques don't have that luxury. So, but the boutiques are still under the same pressure to have to be compliant in the market. And it's a real threat. It's a real concern, as you can see from the results from the survey that we conducted.
Ed, yeah, it's actually quite a sad thing as well. To me, from what you've just said and reading your report, and thank you for that report, it seems to me that two things might happen. Number one, the vultures from the big boys are going to circle and cherry pick the talent from the boutique operators. Or number two, the boutique operators get themselves together and say, in order to survive, we've got to get together. And that destroys the whole purpose of a boutique operator, because it goes from being boutique to big.
Yeah, no, absolutely, and we were seeing the similar concerns from the boutiques that we interviewed and we surveyed through this process. And it is unfortunate, because one of the things that the larger tier one organizations offer more systemic risk in the industry than comparatively to the boutiques. But the boutiques are under the same regulatory pressures with less resources being able to meet those requirements.
Ed, could you give us some sort of flavor?
One of the things that's interesting too is that it may not. Oh, sorry.
Ed, finish your thought. Finish your thought.
Yeah, no, I was just going to say that one of the interesting things is that smaller boutiques are looking to join together. Not forming larger organizations, a mid-size or but they are joining together. There's a recent group formed out of Europe earlier this year called the Group of Boutique Asset Managers, to be able to share like concerns, share issues that they're having with the market, and trying to understand how they can combine without losing that independent boutique niche personality that is the backbone of being a boutique, the whole purpose of being a boutique.
Ed, could you give us an indication of how you would define a boutique in terms of assets under management? And then secondly, the kind of regulatory stuff that we're talking about, presumably the kind of objections they have is to regulation for regulation's sake, rather than seeing it as in some sort of situation where it's actually having a positive impact.
Yeah, that's a great question. I mean, to your first point around, or first question around assets under management, I think we all have a tendency to look at that as the first way to define what is a boutique. Even within SunGard, we have had discussions that a boutique is under 5 billion USD in AUM, or 10 billion, or 20 billion even. But what we found, and what the respondents came back to us during the survey, is that it's less about AUM, and it's more about the personality of the organization. And it's around the entrepreneurship, which is a difficult word to say. It's around being niche focused. it's being nimble. So it was more around the characteristics of the organization than it was around specific AUM. If we wanted to look at an AUM definition, it really varies from market to market.
So if we look at this too small to succeed, what is the fate for boutique asset managers down the line? Do you think that they're basically going to evaporate from the system and fold back into a large asset manager?
Yeah, I think that would be a worst case scenario. I think what we're seeing and is that these small boutiques are actually fighting and determining ways and being innovative around how they can meet these regulatory requirements. So being too small to succeed, really, there's really what I see is 2 or 3 different options here, right? One is that, yeah, they will merge, you know, they will merge into larger organizations, and that might be, some might say that might be an intentional outcome of some of the regulatory mandates that are being put in place. You know, if these boutiques become less in number but larger organizations, it's less organizations that the regulators need to police. So that's one side of things, is that there will be some sort of consolidation in the market, and we see that as far as boutiques are concerned.
Ed,
but then the other side is
really
how do these small boutiques, how do they cope, right? And so they can cope by outsourcing some of these functions, and we see a big interest in that from the survey results, right? So outsourcing some of the compliance and the middle office functions, where traditionally outsourcing was really focused around the back office. That's very normal. Now the outsourcing, the desire to outsource processes is moving more into the middle and even into the front office side. So it's outsourcing non-critical functions, and then obviously the role of technology. And then just really quickly, just to sort of end that thought, the service providers, whether it be a custodian or a fund administrator or a technology provider like SunGard, we need to be able to tailor services to these boutiques, specifically for boutiques, specifically at boutique pricing, or else, yeah, it could be that worst case scenario of boutiques just sort of falling off the map.
Yeah, we don't want that to happen. Does this all the issues that we've discussed in the last few minutes compromise the ability of the boutique operator to compete effectively for a mandate? And is it the case that the people dishing out the mandates might say, look, we like you, that we like your investment process, but we don't want to give our money to a company that is under pressure, because if you're under pressure, then you can't, you know, function properly?
Yeah, absolutely. That's a very good point. And I think in addition to the regulators putting pressure on these boutiques and the boutiques having to look at being compliant, it's also the institutions. You know, it's also the investors. You know, in order for these boutiques to get these large mandates, they not only have to be compliant, they have to show how they're being compliant, show that they have industrial strength technology and industrial strength processes. Again, it's just another added burden onto these boutique managers.